Hi, welcome to another video. In this video, I will cover this Roomba company or this iRobot corporation. The ticker is IRBT. The agenda for today is in the stock valuation is we'll know about the company, the products, the strategy, and the competitors. Once we know all about this, and then we'll go over the management, we'll see the financials, valuations, top institutions, and then we'll come up to the price target for 12 months. So let's get started. But before we get started, just the disclaimer, this is just an education video and consult your financial advisor prior making any financial decisions. So what is this? iRobot is the leading global consumer robot company. It's very important to understand rather than just buying the stocks, because in this channel, when I'm trying to go very deep into this, I'll really like to see whether I can hold this for many years or not. If not, honestly, I don't like to waste my time. So here, I think this is the company which is the robotics company behind the scenes. That's what I got from it, right? So this is a company who design and build robots. They have more than 25 years of experience in this field, right? Pioneers in robotics and consumer product industry. And and the main sector what they are trying to achieve is the cleaning is in the consumer sector, right? So let's see. So they have already sold over 30 million consumer products worldwide, right, since 2002. We'll go over more on the financials, but just the quick what I see from their 10K is our total revenue from 2019 is 1.2 billion. So this is still a very small company. It's 1.2 billion in terms of the market cap, and as you can see, there are it's an international company, right? So it's not, and the sales and revenue is growing. So that's a good part about it. If I look into the company's strategy, the company's standard strategy is basically they have to expand their Roomba products. They want to go into more into product diversification and build positions within the smart home ecosystems, enhance the Terra capabilities, right? So I'll go over in the next slides, but pretty much they are more focused on the long-term operation profitability, which makes sense rather than just from the short-term perspective, just to boost the stock for the short terms. So that's pretty much on there. So pretty much they are very dedicated to the global household market, and this is, I think, the cleaning market is as in more and more people, the millennials and even the old age, when they are the old age getting older, or millennials, they don't want to spend in irrelevant work, especially like cleaning the house and all. I think the robots are the perfect examples. And honestly, even as a consumer, we also own one of the Roomba, who's the vacuum cleaner, and honestly, this is a very good product. Used it for a couple of months now, and on no complaints. It saves a lot of time. So as a consumer perspective, used it. So I think this is revolutionary from that sense. Okay, so this is their right now. Their product categories are, as you can see, this is a Roomba, and then there is a mobs as well, right? So the price target for is not that expensive. They have from lowest to 249 to higher model as well. The good thing about this price range, at least on 400 or 300, is just a one-time investment, and people can spend that much of money, right? Rather than going on near to the 900 or 1000 range. And and then they also have the education coding bots as well, which is separate. But that's not only that. The one thing which really I like it, so we can see, okay, Roomba and Brava, it's monetized their technologies, but the Terra lawn mower, so they're working on that. So I think it will be a game changer as well. Then in the whole ecosystems, it will. So anything with the cleaning and like lawn, it's a lot of hassle, and so many old kind of a lawn movers going on, which makes so much of a noise. If we have something which you can just push a button and let it go, it will be much easier, cleaner. So right now they're still doing a research, but I think once it comes, it changes everything. Yeah, now we cannot just isolate it without the competitors. I see that this market is huge in terms of the competitions, right? You can see such some big names are there, but what the company is trying to pitch here is that they will work in addition to their vacuum cleaner. They're not replacing, but I think when more and more the time goes and these products are more mature, these manual cleaning robots will go away, and then only this will be. So the automations will take over. So, and more robotics will be there. So there are pretty much other companies as well. I haven't used that, but I know certain big name like Dyson's and all, right, Shark, and others, right? So this is on the company. Overall, the company, we see the strategy, we see the products and all, right? Now let's go to the management, right? Who's driving that? So if I see from the management, one good thing I would like about he's a CEO and also the founder of the company, right? He's a CEO and the founder, and he is graduated from MIT, right? So it's a very good institute. He has bachelor in electric engineering and master in computer science. So that's good. So whenever there is an owner who's also the founder, it's great, right? He's a co-founder. The CFO on this one, I'm not honestly very impressed by this. Maybe she might be good, but I haven't seen much good experience. She is executive vice president as right now. She was just promoted as a CFO, but from the academic perspective, she was in economics. She's good in economics and English, right? So, and she led some financial positions. Maybe she's good, but so that's just a personal opinion. But okay, now let's go to the financial. We already have covered two. So if I go to the financials, if I see from 2014 to compare to the 5 years, so you can see the return on assets is keep growing. The one thing to notice here, to have the lower return on assets on the single digit, although in the last 12 month it's 15%, which is amazing because of the assets is quite heavy, right? They need a lot of investment, so that's why even if the return is coming, so that's low. But overall, as compared to the last 5 years, the last year revenue was pretty good. Look at on the return on equity perspective is growing quite high, is 14.5, and last 12 months is over 20%, which is much better than if I compare the average of 5 years, right? Same thing on return on investment capital. Yeah, so this is over 20 on the last 20. So it's good. If I see the overall the financials, like price to book is 3, and the PE ratio is not that high as well. It's only 16.56, right? So that's amazing. If I see the financial health on the liquidity side of the company is over 1, which is amazing, right? So this means the company has a lot of good amount of liquid asset in, so it won't be interrupted by like any COVID or any these kind of problems. 3 times the short-term assets in compared to its short-term liability, right? So that's amazing. Even the quick ratio, which is even more on the liquidity side, is best. And look at the debt over equities. It's very low in terms of the debt and almost negligible, right? So maybe that's one of the reason they don't have to pay like interest expenses. So that's a very good. Usually in the starting, the companies take a lot of leverage, a lot of debt, and paid a lot of. So it seems like the founder is, and here maybe the CFO is also doing a good job. Not that bad. If I see from the 3-year, the revenue growth is 22%, so which is amazing, right? So if the top line is growing, which shows a very good sign. and the operating income is also 14%, and but the net income is even better, right? 27% on 3-year annualized perspective, right? So let's say now into deeply. So if I compare the total revenue, we see the revenue is increasing, right? But here's a take a dip, and then so this is on the last 4 quarter. I just want to see how recently. So just want to give a note here. So you might say, oh, why this is a dip? This is a seasonality business, right? In the first 2 quarter, they won't have any revenue or have a less revenue, but on the year end comes, people buy more of these kind of cleaning and those products. So that's why you see here that in March or June the sales drop, but then in later half of the year it will get picked up. But overall, if I see the margin perspective, this looks good, not bad. Now let's see how the valuation, how company does in terms of the industry, right? If I compare with the industry, if I see the PO, we can easily see the stock is pretty cheap, right? Where the industrials, similar company peers are the 20 times PE, they're only 16.52 times of the PE. Yeah, the sales, it's a little bit higher as compared to the industry, but not that much, right? PS ratio. The price to book wise, if I see, is all cheaper as well, and the price to free cash flow is only 11, where it's 35 times, wow, on the industry. So that's give a good relative analysis, because right, of the stocks. If I compare the stock with it, the margin with this last 5 years, and let's see whether the company is doing good or bad. So I'll see here, right? On the gross profit margins, the company is pretty much doing better, right? It's from 47, whereas compared to 34%, right? So it's good. From the operating margin perspective, also the company does a little better, not that much. The pre-tax and others. So what is trying to share in the recent years, the company is doing much better than as compared to his historical 5-year ratios. So this means the company is doing pretty good, because all those margins are pretty nice as compared to the historic, which is a good sign. So before we close it, so these are the top institutions ownerships. These are the, as you can see, BlackRock, Vanguard, Invesco, Credit Suisse. They are the one, and with the dates, they have bought these many shares at even these price, and now even the share price is not that difference. So it's around 88, so on $8-9 a difference. Otherwise, yeah. So this is the one. So far, if you like the video and you haven't given any thumbs up and all, I usually always forget to ask in the beginning, so please give a thumbs up, and it's really like Google algorithm really like that. And I'll also, and if you're new, feel free to subscribe to the channel. And yeah, and the last not the least, this is my price target for the next 12 months. So right now the share price is going this, and so right now we are in the beginning of January. So I expect in the next, when I run the models, I find it can go on the high on 102 and on the 78, because the reason is company is doing a lot of investment in research, so they spend on that. So maybe the share price won't go up. Maybe in the near terms, it might be possible the share price might drop as well because of the seasonality factors and so on. But I believe, as personally, this is not a short-term stock. This can be a very big in long terms. So let me know what you think about this, and yeah, so put in the comments, and if you already own, also share with us, and don't forget to give the thumbs up. So yeah, so subscribe, like, and comment. And yeah, if you want to share your favorite stock and want me to cover, please put in the comments. Thanks for watching, and